Stocks dipped to the lows of the day as fresh global uncertainties and mixed earnings cloud the outlook. Metals and IT are the gainers, while auto and financials are the big drags. With the Supreme Court ruling against any AGR relief, the future of Vodafone Idea and the centre's three-player market stance comes into question. The ball is now in the government's court. DLF builds on to gains following a strong quarter of bookings and collections. Burger King franchise Restaurant Brands Asia jumps on a strong India show, while NLC India climbs on its power segment ramp-up, but Domes Industries slides on slowing growth. American economist Paul Krugman tells CNBC-TV18 that the Moody's rating downgrade shows that faith in America is shaken. He adds that the tax cuts in the budget bill will blow up the already unsustainable deficit. He sees no trade impact on India, even as China gains at the cost of the US. Good afternoon, you're watching Business Lunch live from the CNBC-TV18 Motilal Oswal studios. I am Hormuz Fatakia, and after a couple of days of consolidation, we are seeing a bit of a downtick on the markets. The Nifty breaking below some important levels on the downside. Of course, still we have another about 3 hours or a couple of hours of the trading session still left to go. So it'll be interesting to see whether this dip that has come into the market gets bought into. For now, the index is trading below the mark of 24,800 at the lowest point of the day. 150 points lower on the Nifty. The Sensex 2 is now down almost 500 points, so that too is at the lows of the day. The broader markets, which have been outperforming over the last 6 to 7 trading sessions, they too have taken a break. The mid-cap index is down 500 points as well, extending its losses now to close to 1% as we speak. The small-cap index, which was higher at the start of the trading session and up till at least the first couple of hours too, has given up the gains and has now slid into the red. Of course, it is the index heavyweights that are leading the charge lower, or in terms on, at least on the Nifty. If you could pull up the contributors chart, you would see the usual suspects. It is the Nifty heavyweights, be it HDFC Bank, ICICI Bank, Maruti, Reliance Industries, all of them contributing to the Nifty downside. And there you can see HDFC Bank and ICICI, the two principal culprits of the Nifty fall in today's trading session. So as of now, the Nifty at the lowest point of the day, but reactions remain pretty stock specific as well. But to begin the show, then, sources are telling CNBC-TV18 that intense negotiations are on between the US and India for finalizing a trade deal before the reciprocal tariffs kick in. This as Commerce Minister Piyush Goyal is holding discussions with the US Commerce Secretary Howard Lutnick in an effort to expedite the first tranche of the India-US bilateral trade agreement. Parikshit is joining in now with more on what his sources are telling him. Parikshit, good afternoon.
Well, Commerce Minister Piyush Goyal will also be meeting USTR Jamieson Greer, and we're told that intense negotiations are on between India and US to finalize an early harvest trade deal. What this means is that we're looking at 3 phases or 3 tranches of the India-US trade deal, and we're looking to finalize the first phase or an early harvest deal before the 2nd of July, when reciprocal tariffs kick in. Now, India definitely wants exemption, complete exemption from those reciprocal tariffs in return for the trade deal with the United States. But the US so far has not given any indication or clarified whether, if there is a trade deal, an early trade deal with India before the 2nd of July, whether India will be exempted from tariffs, reciprocal tariffs or not. That remains to be seen. However, all efforts are being made to have a deal as soon as possible. In fact, we're told that India has put forth a very strong proposal for an early harvest deal covering goods and services, a wide spectrum of goods and services, including automobiles, electronics, and non-tariff barriers as well. We want 0 for 0 tariffs in the India-US trading partnership. The US, on the other hand, wants to impose a 10% tariffs on all goods coming from India into the US market. Let's see where things finally land. Having said that, the US has also conveyed to Indian officials that it's not in a rush as far as concluding this trade deal goes. This does put pressure on the Indian government as well, but this is a bargaining tactic. Let's hope we are able to negotiate a trade deal by the end of July and also get a reprieve from the reciprocal tariffs.
And all eyes are on that potential trade deal, isn't it? Parikshit, thanks a lot for that. And on similar lines, Parikshit also spoke exclusively to American economist Paul Krugman on the possible impact of an India-US trade deal on both the economies. Listen in.
In terms of a trade deal, I've actually been mentioning India as one of the few places where there could conceivably be a meaningful trade deal because India, although it's come a long way down from the extremely high levels of protection it used to have, still India does have significant tariffs and it can offer the United States concessions in the form of reducing those tariffs. It's very different. We had an alleged trade deal with the UK, which was completely meaningless. It had to be meaningless because the UK has less than 1% tariffs on US products. So the UK couldn't make concessions because there was nothing to concede. India could make some concessions, and maybe that's enough to make some difference. Maybe it's enough to make the the United States for Trump to declare victory. In terms of the impact on either economy, it's really not going to be a big deal. India is, among other things, India is not close to the United States. It's not a neighbor. America is not India's biggest trading partner, and India, from the U.S. point of view, is a really quite minor trading partner. It's a growing economy. It's more significant than it used to be, but it's not nearly as big an economy as, say, the European Union, and it's not nearly as close as Canada or Mexico. So, but U.S. business will not even notice whatever the deal is. It will have no visible impact on the U.S. economy, and probably not much impact on the Indian economy either. No winners economically. This is destructive for everybody. And, it tells you something about how much we've lowered our expectations that we think of as a 30% tariff as low. I mean, that's still a crazy high tariff. 145% tariff basically meant shutting off trade completely between the United States and China. A 30% tariff, there's some estimates and assumptions to be made, but when I run it through my model, I say this will only cut trade between the United States and China by 65%. We're still talking about a massive decoupling of the world's two largest economies, and this is a bad thing. It's a bad thing for both of us. I had to say, I think probably in the long run, the damage will be greater to the United States, but it's actually huge damage to both economies. So how you can look at this and not say, my God, what have we just done, baffles me.
As we see US and Donald Trump disrupting the global economy, disrupting the multilateral institutions, what does this mean for the rise of China economically? What are the big themes around China that you're watching out for and which possibly concern you?
Well, China has some serious problems. China is an economy that's built around torrid rates of growth, 8, 9%, and they still have a lot of their institutions are set up for that, but they can't do that anymore. Their working age population is shrinking. Their technology has advanced sufficiently that they can no longer achieve extremely rapid technological progress from borrowing. They're still formidable. They still have a lot of growth potential, but they're not managing it very well. They have excessive levels of investment with diminishing returns. So China has problems. But I have to say that in terms of global influence, this is the Trump administration is really making China great again. I mean, we are now in a world where China is a more reliable negotiating partner, can be trusted to keep its word far better than the United States. It pains me to say that. And China is an authoritarian regime, and they are generally not very trustworthy, but they're not nearly as erratic as my country has become.
A no holds barred conversation there with Paul Krugman. And moving back to our own markets, now a whole host of stocks are buzzing in today's session, and Vinny is joining in with that entire list on the back of various news flows. Vinny.
Hi, Urmas. Good afternoon. So, yes, keeping an eye out on a lot of stocks, mainly on the back of their earnings that we're talking about. Pfizer, a good set of numbers that's come in from the company in terms of revenue growth, 8%, margins, 38.4% versus 34.7%. So, this is after a very, very long period of time that you're seeing these margins go above this 36% mark. I think sometime in FY 22-23, last time when we saw these 36% range, now this time it's 38%. So, multi-year high in terms of the margins of the company. Overall, the new management had come in a couple of years back. They were working on this as well. So, good numbers from Pfizer. Revenues and profits also seeing a very, very sharp growth. Now, DOMS on the other side, a weak set of numbers that's coming from the company on a sequential basis. The revenue is just the growth of around 1.5% QOQ, EBITDA 0.5% growth sequentially, and margins have seen a contraction of 10 basis points. So, that is something that we'll keep an eye out on. The company said that they're going to be remaining watchful in terms of external uncertainties that are impacting their numbers, and they're aiming for a double-digit growth in terms of trajectory in FY26, but we'll have to wait and watch if that actually happens. HEG revenues are down by almost a percent for this quarter. They've reported an EBITDA loss this time versus an EBITDA profit last year, and what you're seeing in terms of the commentary coming in from the management, they seem quite optimistic in terms of margins. They're expecting that to continue in the 20% to 25% range. They expect utilizations to improve to 85% from 80% in FY25. So that is something to watch out for. Lastly, DLF, obviously, bookings were strong, collections were strong. Cash balance, that has also seen a jump up coming into operating cash flow. That has started improving. And that is the key reason why even analysts are positive on the stock. Guidance is what they have maintained for FY26, the previous guidance. So no change in terms of that. And that is why DLF is buzzing in trade today.
Oh yes, and at least 8 analysts who have coverage on DLF expect the stock to cross 1,000 rupees on the upside as well. So positive commentary, positive brokerage notes from DLF, and it's reflecting on the stock as well. Vinny, thanks a lot for that. But FY25 has now been a weak year for private life insurance companies. But what's in store for FY26? What kind of growth is expected, and how are valuations stacking up? Yash is joining in with a comprehensive lowdown of all of that. Yash.
Well, Hormaz, as you rightly pointed out, FY25 has certainly been a weak year for private life insurance companies. In fact, the weakest year in the last 6 years. The new business premium for private life insurance companies, that grew by about 9.8%, and that is essentially the lowest if you look at the previous 6 years, FY20, 21, 22, 23, 24, and now of course FY25. The growth in FY25 has also been the lowest in the last 6 years, and the average when it is taken in that sense. The growth between FY20 to FY25 averages around 16.6%, which is also much higher than what the industry grew in FY25. It's not just that that the new business premium has witnessed a slow growth. The total annualized premium equivalent, or APE, growth in FY25 has also been lowest as compared to an average of the last 5 years, which is between FY20 to FY25. APE growth in FY25 for private life insurance industry, that grew by about 10% as compared to the average growth between FY20 to FY25 of about 14%. The total annualized premium equivalent slowed down because of the sluggishness in the retail business, which again saw the slowest growth in the last 5 years. The retail APE growth in FY25, that stood at just about 3.23%, which was much lower than the average growth in the last 5 years of about 13.6%. Now, important question is that has the growth bottomed out for private life insurance companies? Let's look at what the management of these companies had to say. HDFC Life Management said that they expect APE growth to remain soft in the first half of FY26, as it would be more back-ended. Margins are expected to remain range-bound as well. ICICI Prudential Life Insurance Management expects FY26 growth to outperform industry average. SBI Life Management expects a 12% growth in APE, 14% growth in individual APE and VNB, and margins to be between 27 to 28%. Axis Max Life Insurance expects a 16 to 17% growth in APE, around 22% growth in VNB, and margins to be around 24 to 25%. Brokerage houses are also optimistic, on private life insurance companies as well. 29 of the total 36 brokerages which cover HDFC Life have a buy call, 7 have a hold call and none with a sell call. The consensus 12-month target price is 814 rupees a share. That's a 10% potential upside. 34 brokerages have coverage on ICICI Prudential Life. 22 have a buy call, 10 have a hold call and 2 have a sell call. The consensus 12-month target price is about 671, a potential 10% upside again. For Max Financial Services, a total of 20 brokerages have coverage, none with a sell call and 19 with a buy call and about 1 with a hold call. The 12-month consensus target price for Max Financial is about 1,500 rupees a share. Finally, coming to SBI Life, a total of 36 brokerages have coverage, 33 have a buy call, 3 have a hold call and finally none suggesting sell on the stock. The 12-month consensus target price for SBI Life is about, as you can see, 1956 rupees a share. As far as valuations for private life insurance companies is concerned, that also seems to have bottomed out. The peak valuations were in the year FY21. HDFC Life, that has moved from 4.8 times to FY27 forward multiple of 2.2 times. For ICICI Pru Life, from 2.7 times to 1.4 times. For Max, from about 3.3 times to 2 times. Finally, SBI Life from 2.5 times to about 1.8 times. So, of course, all indications suggesting that growth and valuations have bottomed out. The big question still remains, could FY26 finally be the year for private life insurance companies?
I will hold you to that answer for that, Yash. Thanks a lot for that comprehensive analysis of the life insurance players as well. By the way, numbers of Sequin Scientific flashing on your screen, 11% revenue growth for the quarter, and the stock down around 1% as we speak. A net profit of 9 crore compared to a net loss that it reported during the same quarter last year. Choppy moves so far in Sequin Scientific. Take a short break. You get your whole host of global news updates on the other side. Stay tuned. Welcome back. Still 160 points lower on the index now, nearing the lowest point of the day for the Nifty. But moving on to some global updates then, US President Donald Trump's sweeping tax cut bill has been approved by a key congressional committee. Now, this is Trump's first big legislative push in his second tenure. Now, the measure would extend Trump's 2017 tax cuts and reduce taxes on some tips and overtime income. Non-partisan analysts say that the bill would add $5 trillion to the nation's $36 trillion debt over the next decade. A possible vote on the bill in the House of Representatives could take place later this week. Hear out what Jason Furman, the former chair of the Council of Economic Advisors, had to say on this.
One is what is going to happen to the deficit and debt. And here, every single plan put forward by the Republicans this year would increase the deficit, would increase the debt. And in fact, the Senate plan would increase it even more than the House plan, which is currently under debate. The separate issue of to what degree do you want to address things on the tax side or the spending side. Here's something notable. The House bill does cut spending. The Senate budget template actually increased spending on things like security and border, even more than it cut spending in areas like Medicaid. So the Republicans are much clearer about cutting taxes than they are about cutting spending.
The other important bit there from the US, apart from the trade negotiations, is this tax legislation. Take a short break. On the other side, sticking to Donald Trump, who spoke to Russian President Vladimir Putin to discuss ceasefire plans with Ukraine. More details on that phone call on the other side. Stay tuned.
your families have been in the gems and jewelry business for centuries. In your case, centuries. In your case, how long?
Decades.
Decades, okay. And you didn't want to do anything with the jewelry business, but yet in 2005, both of you decided that it sparked the fire within. What happened there?
Aditi's always loved jewelry. I grew up watching my dad in wholesale gemstones, and I always thought it was a sleepy, antiquated business, so I never really wanted to get in. Life, of course, comes full circle. So my first brush with jewelry was in college. Kind of crazy story. Ratan Tata came to speak to campus for us, and I introduced myself and I said, I'm such a big fan, but I just want to let you know that when I go from Delhi to Jaipur, I'm behind a Tata truck, and the exhaust is coming straight into our car, and I fall sick. And so if you can fix that, that would be great. And we had a couple of minutes of conversation. He said, give me your details. And so when he got back to India, he then wrote me a letter saying, next time you come to Bombay, I would love to meet you there, which is insane. So go to Bombay, and we had a 3-hour conversation, and he's like, why don't you visit Tanishq? Tell me what you think. And that was my first brush with jewelry retail.
Welcome back. Moving on to some developments in the Russia-Ukraine conflict. The US President Donald Trump commented that Russia and Ukraine will begin talks on ceasefire after the president's 2-hour-long telephone conversation with his Russian counterpart Vladimir Putin. Take a look at this report.
We just spent 2.5 hours talking to Vladimir Putin, and I think some progress has been made.
U.S. President Donald Trump on Monday said Russia and Ukraine will immediately start negotiations toward a ceasefire and an end to their 3-year-old war after holding a call with Russian President Vladimir Putin.
Hopefully we did something. We also spoke to the heads of most of the European nations, and we're trying to get that whole thing wrapped up. What a shame that it ever started in the first place.
After the call with Trump, Putin told reporters in Sochi that efforts to end the war were generally on the right track.
The U.S. president has expressed his position on the ceasefire, and I, for my part, also noted that Russia also favors a peaceful settlement of the Ukrainian crisis. We should simply determine the most effective ways to move toward peace. We agreed with the U.S. president that Russia will suggest and is ready to work with the Ukrainian side on a memorandum on a possible future peace treaty, which defines a number of issues such as the principles of settlement, the terms of a possible peace agreement, and so on, including a possible ceasefire for a certain period of time if the appropriate agreements are reached.
Ukrainian President Volodymyr Zelensky spoke to Trump one-on-one before the Putin call and then again afterwards in a conversation with other European leaders. He told reporters that he hoped a high-level meeting with Russia, the U.S., and other nations could happen as soon as possible.
We are considering a meeting of all teams again. We would like it to be at a high level. America, Ukraine, Russia, European countries, and Great Britain. Such a meeting could take place in Turkey, the Vatican, or Switzerland.
Ukraine has said it is ready for a ceasefire now, while Russia has said conditions must be met first. Direct talks last week between Moscow and Kyiv had failed to achieve a truce.
Look, I'd say we're more than open to walking away.
Shortly before the Trump-Putin call, U.S. Vice President J.D. Vance told reporters that Washington recognized there was a bit of an impasse.
Look, I think one open question is Vladimir Putin serious about negotiating peace, right? He has made some concessions. He has taken some serious steps in these conversations, but we feel like, we're at a point where we're hitting an impasse, and that's why the president is talking to him on the phone. I think, honestly, that President Putin, he doesn't quite know how to get out of the war.
Trump, who has promised to bring a swift end to Europe's deadliest war since World War II, has repeatedly called for a ceasefire. Putin, whose forces control a fifth of Ukraine and are advancing, has stood firm on his conditions for ending the war, despite public and private pressure from Trump and repeated warnings from European powers.
In other global economic updates, China's central bank has trimmed its key lending rate by 10 basis points after seeing an ease in trade tensions, offering room for monetary easing to boost the country's economy. The People's Bank of China trimmed the one-year loan prime rate to 3% from 3.1%, while the five-year LPR was cut to 3.5% from 3.6%. And this marked the first rate reduction in China since the 25 basis point cut in October of last year. But just before we call time on this edition of Business Lunch, some flashes from Zydus Life on your screen. US sales have increased by 27% on a sequential basis to 363 million from 285 million in the previous quarter, 304 million last quarter. So even a 19% jump on a year-on-year basis as well. So US sales doing well for Zydus Life. Not a significant reaction that we are seeing in the stock as of now, still near the lows of the day, but an important number coming in there. The US sales for Zydus Life up 27% from the previous quarter and 19% higher from last year. But with that, we call time on this edition of Business Lunch. We leave you with the Nifty at the lowest point of the day, near the mark of 24,780. From me and the team that put this show together, thank you so much for watching. Midcap Radar up next.